So I have got an enormous amount of crap that I need to be able to tell everybody about, but I can't because it's overwhelming all the stuff we're working on. We've got a ton of things in the works, especially once we hit 2026. It's going to be intense, the amount of things that I've got going on all over the place, multiple different business angles and all kinds of things. And a lot of it's going to help you, the real estate investor. So some of the things that tend to come up that is a big worry for folks is, you know, I hear from a lot of people. They're like, "Hey, I'm working on this stuff. I got these ideas for real estate investing. I really want to be able to build for my future. I want to, put some things together for my family, for my kids, but it just seems to be very overwhelming. And when it's hard to explain to my spouse, and they're not quite understanding everything because they just can't see it, guys." I got that solved. I freaking got that solved. In fact, let me show you. That's one of the things where it comes to the difficulty of being able to convey to others within your household what's going on in here is definitely hard. But it's even harder is if you're trying to do a really good solid structure can get very confusing, can get very, very, very difficult. When you're talking about attorneys, right? You're talking about CPAs, trying to find a CPA that understands a real estate investor. Hard stuff. The other thing is how do you explain all this and have a visual other people can see your vision? We're trying to help you with that. So number one, the CPA, the attorney thing, building out your LLCs, building out your trust and your holding company, your LLCs, that's daunting. And it's expensive. Some people say, well, I can just do that on my own. There's a lot of people say, I'll just go out there and take care of that. But then they call and say, hey, how do you handle this and how do you handle that? And how do I build this out? How do I make it legal? There's a lot of things in there. What if I told you that you could have an attorney on retainer, literally on retainer, for $3,680? You pay an attorney $3,680, and they are on retainer for you to help you with your entities going forward, period. If you want to do a trust, it's an additional expense for a trust. But once it's done, it's done. One time cost, guys. And now you can move forward. What's even awesomer? I know awesomer is not a word, but this is freaking awesomer. Let me show you this. Go to your Google or wherever. Go to your URL, type in www.QJOEntityVault.com. QJOEntityVault.com. You're going to see a familiar sumbitch on here, and I'm going to show you how to use it. But what's awesome about this, I'm going to pause it, is you can go in here, click on this, access your vault, and when you get into it and you build this out, just put in your name, your company if you want it, phone number, email, confirm email. I will already have the code in there. You get the first month free. Click on these and register that puppy. So once you register it, you're going to start basically building out your future. If you have a difficult time and figure out how to do it, just communicate with us. We'll show you. Ultimately, you get to literally, I'll have to show you in a different video. I'll show you in the next one, how you get to now build out everything for your family and be able to show it and have all that documentation reserved for you. It's like, guys, watch the video. Just watch the dang video on that. That's what you do. Forget that. Forget the register piece. Just go to the video. Watch that. I want you to get an understanding what this is, because this is monster. Remember that those of you who, that video right there, watch and just watch the whole thing. It's 10 minutes, but a lot of it's instructional. So you don't have to sit through the whole thing. You can fast forward if you want to the instructional part of it. But do you remember the old Sally Struthers video? She said for less than $1 a day, you can save a child from hunger. For less than 99 cents a day, you can save your own children from losing everything that you created. Because that right there will help you store it all. I'm not going to explain it. You go look. Go freaking look at what got built. This is pretty damn amazing. So let's get into some other stuff that's happening in the world right now. So we've got news that is coming out this week. But bigger than the news, what happened, right? We had the data blackout, and some of it will never be released, which is very, very interesting. So when the government shut down, the markets didn't just lose Washington; they lost a lot of economic data that drives really every decision in Wall Street, and that's something that traders and analysts have been used forever, right? For as long as this data has been available, most of it since the 70s, right? So for weeks, those traders, analysts, and other Federal Reserves were flying blind into what's happening in the economy, and they're kind of guessing at it with what they knew from going to private places, right? So no jobs report, no inflation readings, no retail sales, no GDP inputs. The entire system was forced to rely on what they referred to as second-tier private data and sentiment-driven trading. I personally think that that's a little bit more safe. That's Aaron Chapman, but I could be wrong. But there was uncertainty in that, and it created volatility in the bonds, widening mortgage spreads, made forecasting very difficult for folks. Now that it's open again, agencies are confirming that some important data, not all of it, is coming back. Just a little bit's coming back. So that will not be released as weekly jobless claims during the shutdown. We're not going to know what's happening during the jobs. The job openings during that period, we won't know what was happening as far as job openings. CPI and PPI components that had real-time inflation-fueled data, not going to happen. Housing and rent sampling data, gone. Portions of retail trade and consumer expenditures, gone. Several other underlying stuff for GDP revisions, all that stuff, gone. Treasury daily statements for certain shutdown days, gone. So these data sets are what people were using to try and determine where they were going to place their money within the market. Well, now they're not going to ever get it, which is kind of cool in my opinion. I personally think that that's good because people are very emotional in the market. So if you've got them trying to trade into what's coming, but they're also looking backwards, which, you do need to look into history to get a feel for what's going to happen going forward. They're using stuff that's very old now, because data in our world, it's called in 10 minutes, it's old, right? If they go backwards, how would that affect our markets? I personally think it might be a good thing, but then again, others might think otherwise. What do we have coming out this week? So today, PPI is going to happen. It's actually already happened. Let's see what we've got. Producer Price Index and the core PPI should be released right now. So it is actually exactly as forecasted. The core PPI is down a little bit. So the Producer Price Index is down from what they anticipated it to be. Retail sales, those are down. I guess we're going to hold out till for Black Friday. We'll see what happens at the end of November. So this is October data. Retail sales excluding auto, that's up. So autos kind of help push that down a little bit because nobody's buying new cars, it seems like. You're hearing a lot of data out there with respect to the auto sales, that it's not very, very strong right now. The FHA housing price index is showing that that's actually down a little bit. The Case-Shiller Home Price Index is close to flat. It was anticipated at 1.5. It's at 1.4. Consumer confidence is lower than anticipated. And pending home sales, they're actually a bit higher than they anticipated. So that's not bad situation. There's also an interesting analysis going out there. They expect a housing crisis to come worse than 2008. I don't know that we're going to see that. We're looking at a world right now where we don't have the single families to meet the demand of single families. When you've got what's happened with COVID, and then we had all the supply chain feeding now, which is more apartments, because that's where people are being taken advantage of, in my opinion. Also, interestingly enough, the housing market had experienced some positive appreciation just this last little bit. So third quarter of 2025, we're seeing some appreciation. We're looking at Illinois has a 6.9%. Illinois, really. New York, 6.8. North Dakota, 6.3. North Dakota. New Jersey, 5.9. Connecticut, a 5.8. But prices were down to 6 states. Florida experienced the biggest decline, it seems like. But and housing prices rose in 76 of the 100 largest metropolitan areas over the previous 4 quarters. So all interesting stuff there. I find interesting when I'm talking about Florida, because it seemed like there was an enormous flood of people going to Florida, a lot of demand, but I don't know that everybody fulfilled the requests. What really, really, in my opinion, happened in Florida, because I was there. Working with people buying these houses, the delay in getting the housing built created a lot of problem. Sometimes, house construction was supposed to be 6 months. These things took 2 to 3 freaking years. The builders out there, in my opinion, the builders sucked. Most of your builders in Florida were just shit. And there's ones that took people's money and disappeared. There's people that didn't do what they said they would in the contract, cost people an excessive amount of capital. They oversold what they could do. They did not keep they literally sold more than what they can accomplish, right? They got way in over their skis, and then because of that and those delays, it cost them money. Therefore, they're selling another house. And I think there may have been some Ponzi bullshit going on out there. So Florida, I'm sorry guys, but you builders, you suck. You did some really, really shitty things to a lot of people. Now, I'm not saying everybody. Now, this is not a blanket. Florida builders in general suck, but a lot of you did. period. I saw it. Now, I'm not naming names whatsoever, but I've seen a lot of builders stick people in the ass. So just be aware of that. When we're talking about Florida, I think it was really created by a lot of the huge demand we had. They couldn't meet the demand, but they kept acting like they can meet the demand, and then just people got screwed. It sucked. Now, there's others out there that are doing a good job. There's people that are doing what they said they would do. There's people who have honor in this world. So just because I said that as a blanket Florida thing, guys, don't take it that you're specific. You're building one right now. Oh shit, it's a Florida builder who sucks. No, no, no. You can look at things yourself. You can understand what you're getting into and understand what and do the research. Understand what's happening with their market, but understand what's happening with their flow of business, how they're managing their business, how they're managing their builds, how they're managing their permits, all that stuff. Look deep in under the hood. Don't just take somebody's pro forma as gospel. In my opinion, the word pro forma is an old Greek word for bullshit because it's all fictitious data based upon what is anticipated, not what has ever happened. So I'd say pro formas are barely worth sitting next to the toilet and using for something like that. That's it. You're going to have to get other data than some of these estimations. And if you're going off a pro forma for building your business, that's a strategy of hope, and hope is not a good business strategy, period. All right, let's get into the markets and what's happening out there. Go to the QJO entity vault. Seriously, get that thing. If you're looking to build entities, if you're looking to get a trust, you're looking to have that security with holding company and LLCs, you want to talk deeper about that, info@aaronchapman.com. Just email me. We'll set you up. We'll talk about it. And we'll set you up with the law firm that can help you out. Again, badass law firm. So let's just go there real quick. I'm going to show you these guys. We go back to this QJO entity vault because you got to watch that video. Watch the video. Now let's go to aaronchapman.com. Same sexy son bitch we've been talking about right there, right here. Set up your LLCs and taxes. Click right there. Get started. It's on the right side. ATG. Fill this out. These guys are badasses. Again, it's having a entity attorney on retainer, one-time fee. It's not an annual fee, one time, and that you're done. They'll keep building for you. So remember that. That is badass. That right there is ridiculous. Go get it. Get it now. All right. Let's look at the market. We've actually seen some pretty good movement these last few days from when the Fed did its cut and we took that monster beating. And it took a little bit longer than the previous beating, and it's starting to rally back up in there. So we're going to push ourselves back up here, probably pull back unless we get some other sort of news that pushes it back away. We are going into the end, and I think part of this, I mean, we're coming up on how many days till the end of September? We are looking, the end of November. 1, 2, 3, 4, 5, 6 days. 6 days, including, and then we got the first on Monday. The first is when they end quantitative tightening, guys. What is that? Quantitative tightening. I'm sorry, this is going long, but I want to give you data to work off of. Quantitative tightening started here. Quantitative tightening. So we have quantitative tightening kick in. What ended up happening? We had this massive drop. Interest rates went up. So if they stop tightening, we could actually see these things start to break up above this. And again, like I've been saying for all along, the only reason that will go up is if the Fed starts moving into quantitative easing again or stops the tightening. So, which is basically in a way of easing. So if the Fed stops tightening up, which means they're not putting any capital in the markets, but now they're going to start putting capital back into the markets, because they're not holding on to it, right? Then they were going to slip into some easing probably next year. We could see some interest rates come down. If they do come down, what's going to happen to the price of your house? These arguments that the prices are going to go up, they're going to go down, I don't think they're right, because if we get into release of the tightening and go back into easing, we're going to have prices go up. And if you're holding the property now, you're going to be able to benefit from it. If you're not, and you're holding out for the rate, you're going to pay a higher price, and then you're going to get that rate. Where a person could have paid today's price and then later refinance if they felt so inclined. I don't think that you should, but if it's really, really a monster drop, I don't know if they'll go to the extent that they did. We may get a little bit better, but not a ton better. That's my anticipation, but don't hold out for that. You're going to put yourself in a position where you can't get what you're seeking. So info@aaronchapman.com. Let's set some time to talk about the retainer quotes. Let's talk about the entity vault, monster, and how we can help you to protect your future and your children's future and your grandchildren's future. Appreciate you guys. We're doing what nobody else is willing to frickin' do. Contact me.